Hello investors, welcome to Simpli Stocks. Today I have brought for you 4 trending businesses from the small cap universe across different sectors that are doing quite well right now. In my opinion, there are several short-term positive triggers playing out in these 4 companies, and these triggers will keep playing out within this year itself. So you should also study them urgently. But yes, as a standard disclaimer, this video is absolutely not a buy or sell recommendation on them in any way. And all these businesses are part of our coverage, so you must also keep that in mind. The intent of this video is that you get an understanding of these business models so that you can study them yourself. With this, let's get started. The first business that we will study today is GNG Electronics. I have been tracking GNG closely in our Simply Stocks community over the past 1 to 2 months. GNG is in the business of refurbished laptops and desktops, meaning the company buys old laptops and computers, repairs them, refurbishes them, and to make them look new-like. And then they also clean them in the process. And let's say if there is any part that is damaged or that has become old, they also replace it. Then after quality testing, they sell it to corporates and their customers with a warranty. Now we are studying this business today because right now, due to the AI and data center boom, components like RAM, SSDs, and processors have become very expensive. Fabricating companies are preferentially supplying chips to AI and data center companies because they get higher margins over there. So there has been a shortage of memory and processing chips. Prices are rising, and because of this, the prices of new laptops have also gone up significantly. Like if you follow the news, you would have seen that Apple has hiked rates across its whole range of products from iPad to MacBook and everything. Now, for example, an entry-level laptop with 8 GB RAM and 512 GB SSD used to cost around 25,500 6 months ago in December. That increased to 32,500 in January. And just a few months later, by April, the same laptop was selling for around 40,000 rupees. So this means the price has increased by almost 60% in just 6 to 7 months. So to conclude, due to the shortage of RAM, SSDs, and processors, laptops are getting expensive, and not just laptops, even phones are getting expensive. And because of this reason, the demand for refurbished laptops and desktops, that is going up because they are cheaper for companies and corporates. After all, they also have to manage their costs, right? And GNG is getting the direct benefit of this. Now, GNG also has a website by the name of electronicsbazaar.com, but they mainly sell through their offline channels. Like they have a quite good distribution network. They are present in almost 46 countries through their 4,900 touch points. And recently, they have also started building partnerships with technology distributors. Like GNG has partnered with 3 large technology distributors, Redington, Ingram, and Supertron, so that they can now sell their products through these companies as well. And similarly, they are also now in talks with distribution companies in Europe and America. So these distribution partnerships will obviously help a lot because these ICT distributors, they have a very big or massive network. Now, if we talk about geographical segments, so last year in FY26, their 33% sales came from India, 21% from America, Europe had a 20% share, UAE was at 12%, and 14% of sales came from other countries. And their management had also mentioned this in the con call that war has not caused any disruption to their business. Because they have UAE exposure, they have facilities there. Then also there is some portion of revenue from UAE as well. So initially, yes, there was a little trouble, but these laptops and all, they are transported via air. So that has been happening continuously, no problem over there. Now let us look at their results. So in Q4 or the 3 months from January to March, their sales grew by 43% compared to last year. So now sales have reached 652 crore rupees in Q4. If you look at EBITDA, it has grown by a massive 108%, mind you. And the EBITDA margin has also increased from 6.8% to 9.8%. As a result, the net profit has become more than 3 times compared to the last year to reach 42 crore rupees in Q4. Now, apart from this, If we look at the numbers for full financial year 2026, so sales grew by 34%, EBITDA grew by 59%, and your net profit growth was at 91%, mind you, year on year, or we can say it has almost doubled. And you will also see that for full year, the net profit margin increased from 4.9% to 7%. So a very good margin expansion has also taken place, which has resulted in good profit growth. Now on this, the company is targeting 25% sales growth this year and about half a percentage point of margin expansion. But I personally feel that they can do a lot better, at least 30% in my opinion, because the speed and rate at which the prices of chips are increasing. So definitely there is a strong tailwind in the sector for refurbished IT products. And I have personally also observed this, that some people take management's guidance as absolute gospel truth. But you must understand that guidance is just an estimate, right? So you have to do your own analysis on top of it. So I am personally quite bullish on GNG. Now, on the basis of that, on the basis of all this, let us value it. So, assuming 30% top line growth, I think they can do sales of about 2,450-60 crore rupees this year in FY27, and margin improvement will also happen. So, based on that guided 7.5% net profit margin, the estimated profit for FY27 can be around 185 crore rupees this year, which translates into a wonderful 40% bottom line growth. And on this estimated profit of FY27, your 1 year forward PE comes out to around 40. Now, yes, it has rallied a lot bit recently, but still considering the tailwind in the sector, I think it is a good valuation, this 40 forward PE. Plus insider buying has also happened in the business, so that has also boosted the sentiment. But I feel GNG has a long way to go from here. The chip prices which have increased, whether they will increase further from here or not, no one can predict that or say that. But definitely they are not going to come back to their old levels anytime soon in the near future. So the demand for refurbished ICT products, that will definitely go up. And companies have to manage their costs, right? We discussed this. And their management is also quite bullish about future growth, and they are preparing well in advance. Like they had around 1,200 employees last year, which they have increased to more than 2,100 within a single year. Now, these include your technicians and such. And GNG has also been rapidly increasing its processing and refurbishment capacity. Like in Mumbai, it has gone from 1 to 2 facilities, and in the UAE, where it used to have 3, it has increased those to 8 units now. So earlier, company had capacity to refurbish about 60,000 devices every month, which has now been straight away increased to 1.5 lakh devices after these expansions. So definitely I'll say management is expecting good growth and they are ready for it too. So GNG is a good business that I think you can study on your own. Now the second business that we will study is Aditya Vision. Aditya Vision operates electronics stores like Reliance Digital and Tata Chroma, and their main presence is in Bihar, Jharkhand, UP and all. And let me tell you an interesting thing about AVL is that many people run behind monopoly stocks, but very few people know that Aditya Vision in itself is an interesting monopoly business. Like they have 50% plus market share in Bihar. Now, right now, Aditya has about 207 to 210 stores, out of which about 118 stores are in Bihar alone. It has 53 in UP and 33 electronics stores in Jharkhand. Besides this, they have recently opened 3 stores in Chhattisgarh as well. This is a new state company has entered, and it has plans to expand in Madhya Pradesh, Chhattisgarh, and also they are considering West Bengal this year. And by now, you would have also guessed that Bihar is the biggest state for AVL. Like last year, 75% of their sales came from Bihar. UP's contribution was 13%, and 12% of the business came from Jharkhand. Now, the reason for studying Aditya Vision today is that you must be hearing, or most likely you would be experiencing it yourself, that 2026 summers are going to be, or they are actually very, very hot. El Nino heat wave is about to come, or it has actually already arrived. So therefore, Aditya Vision is going to benefit a lot from this. And because of this extreme heat wave, what happens is the demand for ACs and cooling products that goes up. Like during the heat wave 2 years ago, AVL's AC sales grew by 56%. And this year also, the summer is quite intense, and I have been highlighting this repeatedly in our Simply Stocks community as well, that Aditya Vision is going to be a big beneficiary of the heat wave. And here I also want to add on one more thing. It is important, and then I'll talk to you about the results and whatever management is doing. And because some people ask me why I am not betting on AC companies like PG Electroplast and EPAC Durable, the manufacturers. So the reason for that is that last year it did not get that hot because summer season was weak, but AC manufacturers were actually expecting a good season, so they manufactured a lot of ACs which actually did not sell. As a result, there was an oversupply of ACs in the market. So at the dealer and channel level, yes, there are many ACs lying unsold, which stores will be selling this year. But new orders for ACs are not flowing to PGEL and others because there is already a lot of unsold inventory at the channel level. So where 2 years ago, I myself played this sector through PGEL, I myself made a lot of money. But this year, I am more focused on Aditya Vision, and retailers are going to do much better in my opinion than, let us say, your manufacturers. Now let us quickly look at their results. So in Q4 their sales grew by 28% compared to last year. EBITDA increased by 19.4% to reach 42 crore, and net profit grew by 36%. But you will see here that there is a slight dip in margins. Last year gross margin was 17%, which stood at 16% this year. For this too, AVL's management gave the same reason as GNG, that due to, let us say, rise in prices of chips, the prices of phones and laptops went up, and phones are your low margin products for retailers. Plus their sales were also a bit slightly higher in Q4. So all in all, that impacted the margins. So there is a minor dip, but I'll say it is not a major issue, and it is just because of the product mix change. And I would say that overall these are pretty good results. And even more than the results, you need to understand Aditya Vision's near-term outlook. And you must understand that market is also a forward-looking engine. So there is no point in fussing over previous results. Look at the direction in which this business is going. Because last year, that entire was a lean season for AC manufacturers and also retailers like Aditya Vision. But despite that, here you will see that full year sales growth stood at a decent 18% or so. But I think they can do much better this year. And like GNG, AVL is also very well prepared for this. What happened is that because of changes in BE norms, prices of ACs have gone up. And this was already known, so management already bought and stocked up a lot of ACs in advance, so that now in this season they can sell ACs to their customers at those old same cheaper rates. And they were able to build such a, let us say, heavy inventory in advance because they have obviously the advantage of size or the advantage of scale. So this makes them competitive against other dealers. Otherwise, what would have happened is that other players in the market, they will just sell those same old ACs for cheaper rates and take away all the customers. So AVL is definitely competitive, and as it is so hot, it is clear that demand will be strong. So to ensure that there is no shortage of inventory at the last moment, so for that reason also, they have built inventory in advance. Like I was reading, so that they have already purchased and kept 840 crore rupees worth of inventory in advance. So all in all, I have high hopes from AVL, and you can look into this business. Now, a humble request just before moving forward, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simply Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So please do like this video, and yes, also subscribe to our channel. Anyway, coming back to our businesses, the next business is Goldiam International that we will cover. Now, I have covered Goldiam already many times on our channel and in the community as well. So many developments were happening in it all the past year that I had to cover it for you repeatedly. And since then, this business has actually also done quite well as well. So I will not go into all those details of business model again, obviously. So, but if you want to understand the business properly, what I'll do is I'll put the links of those old videos in the description below. You can watch it from there. And today we will discuss, let's say, more about the results and what the management said in the con call, what they are expecting this year. But still, just to explain it in one line, so Goldiam is into lab-grown diamond jewelry. Until now, they have been supplying LGD jewelry to retailers in the USA, and now they are opening their stores in India as well under the name Origem. But obviously, the India business is very, very small. Not even 5% of sales are coming from here. So we will not stress upon that a lot, and we will focus more on the US business. Now with this, let us get straight to the results. So here you will see that for Goldiam in Q4, sales grew by 21% compared to the last year. But I want to bring your attention to the margins here. You will see that the margin expansion has been quite good. The gross margin improved by 583 basis points, or roughly 5.83 percentage points. It used to be 35.8% in the previous Q4 FY25, which has become 41.6% this year. If we look at EBITDA, it has also grown by a wonderful 35.6% as a result. And since there is margin expansion, the profit growth has obviously been faster than the sales growth. The EBITDA margin stood at 23.9%, and then this same margin benefit is getting translated or transferred into the bottom line as well. Net profit grew by tremendous 60.6% over the last year to reach 37 crore rupees in Q4 FY26. And let us quickly look at full year results as well. So sales are up 28% and net profit is up 46% year on year. Full year PAT came in at 171 crore rupees, and net profit margin was also quite healthy at 16.7%. So these are very, very good results, because this year has been quite volatile for exporters due to Trump's tariffs. But what is interesting is that I have been telling you before as well that tariffs had no negative impact on Goldiam, and this business was correcting for absolutely no reason, and it created a good buying opportunity, because when tariffs were announced, they quickly changed their business model a bit. Goldiam shifted to a dual casting model, where it started doing the casting of gold right there in the US. So the origin of the product became the US. Then that jewelry piece came to India for diamond setting, that comes to India for diamond setting and polishing, etc. And after preparing it properly, doing everything, they send it back to the US. So the impact of tariff is minuscule, to the whole value of the jewelry piece. That is only on the value addition that is being done in India. And on the contrary, what happened is Goldiam benefited from this dual casting model, because company told its clients that due to tariffs imposed, we had to change the business model. So the hassle has increased for us. So it started charging higher prices, which has led to better margins. And all of this happened because company managed the crisis so well. And yes, the recent customs duty also that the government has imposed on import of gold, so that does not apply to them either, because Goldiam operates from a special economic zone, so that they get an exemption there because they are an exporter. And now the margin expansion that has happened due to this dual casting, we will get to see its benefit throughout this year. So this very margin expansion is the main trigger in this company that you need to track. Company shifted to this dual casting model partially in Q4 and fully in Q4, partially in Q3 and fully in Q4. So not much benefit was seen for the whole last year, but now in this year, meaning in the entire FY27, company should be posting good margins. Now management has guided to grow in double digits. That has been their guidance always. And they have been growing sales at roughly 20% CAGR over the past 3 to 4 years. So even if top line growth remains at let's say 15 to 20%, due to margin expansion, Goldiam can post 30 to 35% growth in bottom line. Exactly how much the margins will be, that is a bit difficult to predict, because Goldiam is an exporter. So what happens is when the rupee falls against the dollar, it gets the benefit of that as well, the currency fluctuation. But I feel that this is also something a bit disappointing, because management considers the gain from dollar exposure as a part of their regular income. So that is what they do. But in reality, that should be your abnormal income, right? But that is not a big deal. But yes, we will be seeing definitely margin expansion this year. And as far as the India business is concerned, it is still in very early stages. I'll say you should still look at Goldiam from the perspective of a jewelry exporter only. Although the market for lab-grown diamonds is growing in India, definitely, but it is still in a very nascent stage. Right now, they have a total of 24 stores across 12 cities, and out of these, they opened about 12 stores after January this year only. So, company now plans to open more 8 to 10 stores by September this year, and their additional guidance is that by the time this year ends, that is your next year March, they expect to exit with 45 to 50 stores in total. So, to simplify, right now Goldiam is at 24 stores, and they will be opening 24 to 25 more stores this year. So Goldiam is also a good business that you can track on your own for near term. Although I do not see very long opportunity here, this is a kind of business that I carefully evaluate every 3 to 6 months. And one reason is that I see a risk of slowdown in the US business, but they are shifting to premium products over there, like tennis bracelets or necklaces. So that should help. Secondly, I see a risk of high competition in the India LGD retailing market. So many startups and businesses are coming up, getting funded. So competition is definitely going to go up. But yes, Goldiam has also the advantage of legacy and location. So that we will have to see as things play out. But anyways, it is a good business for near term. Moving forward, the fourth and final business I'll be discussing today is Armaan Financials. Armaan is a microfinance NBFC, meaning they are in the business of giving small-sized unsecured loans of less than 1 lakh rupees. Now, because these loans are unsecured, they are given without any security and collateral, the interest rate on them is obviously quite high, because as you see, the risk is also high for the lender, right? So MFI is a high margin sector. Loans which are given carry interest rates of up to 25, 30, 35%. But it is also a risky space. And this is also a highly cyclical sector. When the economy, rural incomes and consumption are doing well, sector also becomes, sector also booms. But with even a little bit of stress, it goes into a down cycle. Right now, the MFI segment is emerging from a down cycle, which is the reason we are studying Armaan today. Because as you will see here in this chart, that in FY24 or 2 years ago, the microfinance cycle was at its peak. Look here how from FY21 to FY24, Armaan's loan book tripled in just 4 years. And then in the very next year, NPAs suddenly increased in the sector and people started defaulting on loans. Many MFI companies had to book NPAs. Actually, all MFI companies had to book NPAs and had to scale down their loan books. And some even exited from the sector. Like IDFC First decided that they would significantly reduce their exposure. But now the sector is recovering again. You will see that their AUM has grown by 22% year on year. Last year disbursements or the new loans stood at 1700 crore rupees approx. And this year, the figure has grown 42% to 2,400 crore rupees. So broadly speaking, there is a good recovery that is playing out in the sector. Now, if you look at Armaan's Q4 results, you may find them a bit bland. But here, you see, you have to understand the direction or trajectory of the business. Do not look at this business from the perspective of YOY improvement. Look at it on a quarter-on-quarter basis, how the business is getting back on track with every passing quarter. And their AUM has, you will see here, it has crossed its previous peak. So it is obvious from here that income and net profit levels should also be good going forward. You will see here that their total AUM has crossed 2,700 crore rupees, and in this, microfinance has a share of roughly 73%. Apart from this, they also give loans to MSMEs or your small businesses. This has contribution of around 20% in Armaan's loan book. Besides that, they also give two-wheeler loans and loans against property, but those are very small segments. Main for us is to track this MFI segment. It has a 73% contribution in their total AUM or their total business. And for the remaining segments, what has happened is management is guiding for about 20 to 25% growth. So they will obviously give a minor benefit of diversification, but the main trigger is MFI itself. Here, AUM growth can be much more than 30-35%. And these MFI loans are mostly given in small towns and villages. And Armaan's main presence here, you will see It is in UP, Gujarat, Madhya Pradesh, Rajasthan, Maharashtra, and Haryana, etc. They have reached 529 branch count, and you will see here as well that out of these 529 branches, 404 belong to microfinance alone. Now, moving ahead, as I was telling you that very strong sequential Q4 recovery has been seen. You will see the loan book has grown by 22% compared to the last year, and 20% quarter on quarter. Disbursements, which are your new loans, so that figure is up 75% year on year, because last year's base was small because of the down cycle. Then disbursements are also up, see, 54% quarter on quarter. So that is the big thing you need to see, that company is giving new loans at a fast pace. And that is why I am saying that do not look at their results thinking that income has declined, or let us say profit has reduced. Instead, understand the direction in which the business is moving. Next, with this, let us come to the most interesting slide of their investor presentation. Here, you will be able to see their PAR levels and NPAs. PAR basically stands for your portfolio at risk, and PAR becomes your NPAs down the line if it is not controlled. So you will see how rapidly their PAR and NPAs had increased during March and June 2025, but after that, continuous quarter on quarter improvement has been there. The sector is getting back on track. Right now, their ROA has improved to 2.3%, and from here, their target will be to comfortably take this up to 3.5–4%. And then, as the ROA grows, a sharp recovery will be seen in ROE as well over the next 6 to 7 months. So Arman is definitely a good MFI play which you can track, and its base is also quite a small. Like, it has a loan book of just 2,700 crore rupees. So on such a small base, the company can grow quite fast. For example, you will see that Credit Access Grameen's loan book, that is 10 times larger than Arman. It is at about 30,000 crore rupees. And so that is why Arman has a small base and it can grow fast. And in this chart, you will also see that when MFI sector was at its peak, Arman used to trade at a 4–4.5 price to book ratio. Now it has come down to a PB of just 2. So as the cycle will come again, earnings growth will definitely be there. But along with that, you will also get to see re-rating happening in this business. So this is an interesting space and interesting business which you can track. It might seem a bit slightly difficult to understand because it is from NBFC and financials, but I think I have explained everything to you in a very simple language. Yes, keep one thing in mind, that this is a highly cyclical sector, so do not expect to do long-term investing here. And you have to just play the cycle right. That is all you have to do. And if you play that right, it can create a lot of value also for you. And since the war has de-escalated, the risk of slowdown and inflation that was building up, so that has also reduced to a great extent. Their management stated that until May, no stress had come up in PAR levels. So that was also, let's say, very confidence boosting. So that is good. And since then, the de-escalation has happened. So that is another development. And I was also looking at the recent business updates of Ujjivan and other small finance banks. So the asset quality is stable in the MFI space. So Arman is definitely a good opportunity which you can look into independently. Now, with this, lastly, I'll say, if you liked this video, then do give me a thumbs up. Along with that, you can also subscribe to our channel Simpli Stocks, because you see all of these are trending businesses within the small cap space, and a lot of time goes into doing this research and then studying them, and it also takes a lot of hard work. So if you support us through your likes and subscribes, we will be able to bring more such videos for you. With this, I'll see you in the next video. Happy investing.